Hi, it's Matthew here and welcome back to this video series on how to save over $200,000 on your home loan. Now, yesterday we went through just some of the mechanics of a home loan, offset accounts, monthly versus fortnightly repayments, how your loan repayment is made up of being the interest component and the principal that you're paying off each month and just how little that is. We also just covered how much in the first 10 years you're paying back to the banks and why they load that 10 years up so much. So today we're going to be going through the actual loan structure that we recommend on how we can save a lot of this interest component and also nearly 10 years off your home loan, which is just phenomenal. So I just want to jump straight into it and we'll get into it now. So we're going to be sticking with the same example we used in the previous video of a home loan of $400,000 at 7%. Now, when I draw out this structure, it's going to look very simple, but it's very effective, but I'll go through that later on. So what we have is your home loan. We have your offset account, and that's linked to the home loan. And when we set this up, we'll set this up as interest only and on a per month basis. Also, what we'll do is we'll set up a savings account and this savings account, it can be a joint account, it can be your personal account, it could be any sort of account. But so what we'll have is the flow of money will be your wages will go into the savings account, and we'll set up a direct debit from the savings to the offset account. And the figures there will be $2,333 plus the $328. And that's per month. So that's the interest, and that's coming off the principal. So you've set the account up as interest only, but you're still paying the principal amount into the offset account. And as I said in yesterday's video, the effect of that will be reducing the loan balance that you're paying interest on. Now, one thing I haven't gone through and mentioned here is when you go to look at purchasing a home or investing, you really need to do a budget. If you haven't got a budget planner, then you can Google it online. There's thousands and thousands out there. Or contact my office and we can help set you up with one. We have one on our website, but it's something that you really need to do. Otherwise, you just don't know where you're going and how you're going to get there. Now, on a $400,000 mortgage, we always advocate to our clients that you need to build in a buffer of at least $400 a month. Now, the reason for this is because if you have a variable rate mortgage, then as you would know, the Reserve Bank meets every Tuesday or every first Tuesday of the month, and they decide on which way interest rates goes. And if it goes up, you need to have that buffer in there because then your repayment will go up. And so if you're already repaying more, then you've already built that in and it's not going to affect your lifestyle too much. Likewise, if they reduce the interest rate, then don't fall into the trap of reducing your repayment. Take advantage of that and to really pay down extra off your home loan. So what we'd like to do is add another $400 per month. So that brings the total to $3,061 per month. So what we do here is we set that up as a direct debit. Now, a lot of people out there will be watching this and thinking, an extra $400 a month, I can't afford that. You know, that's about $90 a week, something like that. And to be perfectly honest, if you can't afford $400 a month, then you're probably stretched too far and you shouldn't have that home loan. sorry for being so blunt, but things happen. Life always tends to get in the way. And if you can't afford it now, then it's not going to be too long before the hot water system breaks, or anything could happen, and you're going to have to come up with it. And what happens when you need to come up with money? You've either got to borrow it from a friend or get another loan, or worst case scenario, you have to sell your house. So we really want to be able to identify in your budget that extra $400 a month. Now, the way we usually find that for our clients is by looking at credit cards, personal loans, or any other short-term loans at high interest rates that we can consolidate into the home loan and therefore free up some cash. And what we find is what we do is we automate that. So the $3,061 per month is going straight into the offset account. And what we find that over a couple of years, you've really built up a lot of money in that offset account. And what that does is that creates a bit of flexibility in case you lose your job, you have a baby. That can really put a strain on your finances. This is why we set up the monthly repayment as interest only, as you can see here. So what this does is it reduces the minimum repayment, so you end up building up a large amount of funds in the offset account, and there's no real disadvantage. You're going to get the same interest rate or very similar, and it gives you more flexibility. So if any of those things I mentioned before happen, then you're not going to need to go back to your lender, renegotiate terms, restructure everything, or apply for hardship, potentially have adverse effects on your credit rating. It just gives you way more flexibility, and you've got the funds there if something happens. Now, the other reason why we do this is we want to create a divide between your home loan and the offset account and your savings account. So your savings account that's where everything's happening, and that's where you trade out of. You have your ATM card on that. All your bills are paid out of that as well. And this means that you've separated your finances. So you've got your home loan, like I said, and then all your trading stuff going on here. And you can see it on your internet banking, but it's creating that divide. Now, by making that extra $400 a month in repayments off your home loan, you end up saving over $200,000 and almost 10 years off your loan. Now, I just wanted to show you such a very basic structure like this, just to get you thinking. Now, this structure can become very, very powerful, and the savings can really start to add up. For example, if you make your repayments fortnightly or weekly, as you can see, because the interest is calculated daily, this can really make a lot of difference over the life of your loan. Another thing that we do is we like to automate our clients' bills so that they never have to pay a bill ever again. So effectively what they're doing is they're using the money that they put aside for their bills to pay off their home loan and saving on interest. And this can really make a huge, huge difference. So that is the first part I wanted to cover off in this loan structure. And like I said earlier, there is a real psychological reason why we make that separation between the offset account and the savings account. And the reason for that is if you're trading in and out of your savings account, and that is where all your money is, that you're saving up over time, then more than likely you're going to spend it because you've got money coming in, money going out, and like I said in the last video, you just lose track, which is why we build the money up in the offset account, and that amount will increase over time and go up and up and up. And obviously that should not be touched at all, because that is what is really paying off your home loan. Now, with all this, is what we try and do is automate everything. So your wages will be going in there, and all this $3,000 will be automated into your offset account, and all your bills will be automated out. Because I'm a really big believer that if we can set up your whole financial situation, it just frees everything up. And in tomorrow's video, what we're going to do is show you a way where we can organise your finances in a way where you just have your money that you can spend each week or each month, and you're not going to need to do another budget or go and ask your partner, can I spend an extra $50 here or $50 there? Everything's done for you, and you just don't have to worry about it, and you can concentrate on your lifestyle. And that is just a great place to be, where you don't have to worry because everything's done for you. Now, one thing I didn't mention before was we don't actually get the lender to organise all of this. Is we work with you or our clients, or you can do it yourself. It's very easy to set all these up. All you need to do is go into your internet banking where you can see your home loan and your offset account. You create a new savings account and you just set up very simply some more recurring payments or direct debits or whatever your lender calls it. You just set them up. It's very, very easy. If you have any problems at all, feel free to give me a call or send me an email and we can walk you through it. It's very, very easy. So as you can see, this whole structure here is to give you more control. And in tomorrow's video, we're going to go into how we can plug in some sanity accounts, I like to call them, where again it gives you even more control on that. So until then, thank you for watching this video, and I look forward to seeing you tomorrow. Thank you.